Hey guys, just want to give you an update on my portfolio. So you can see we have three positions. Schlumberger actually had a pretty good earnings call, so the stock is up, which is good. And then in addition to Merck, I'm going short, but the stock is going up, so I'm losing a little bit there. And also Tesla is trending down. So we have the next order here at 106. So hopefully we will get down there so I can buy a little bit more. And I also have a pending position on Halliburton, so that's the oil and gas company. So Halliburton, that's you can see it's in the oil and gas, upstream oil and gas industry. So in terms of the analyst forecast, it's a strong buy from 5 analysts, and the price target is 46.4. So we have a nice potential upside here. But I'll just want to show you the rationale for this trade, if it will be go down to my price target. Let's go to trading view, and this is Halliburton on the daily charts. So this is the setup I will most likely start to use going forward. I think that will increase probably the success ratio quite a bit. So what we do, we still have, we try to identify oversold stocks. We have this oversold condition here. We have a lot of selling pressure from actually the end of last year. Bottom out on Wednesday at a low of 32.84. And here is what I'm looking for. This is a trade setup. So if I see oversold conditions, the RSI should be close to, or preferably 30 or below, which this is now. As you can see on Wednesday it was 29.85. I'm talking about the RSI now. And then you see, then I would like to see this. This is, to me at least, it is a little bit, like I said, it's a little bit positive candle. You see it's green because it opened low at 32.95, and then it closed a little bit higher. So it closed at 33.24. So even though it gapped down, at least it wasn't more negative sentiment. During the trading day, the sentiments went positive, and the stock actually performed a little bit better. So the closing price was above the open price, and that's why this candle is green. So that is one positive indicator, but the clue here is that the next day we have to wait for a positive day. So we see on Thursday, January 18, we had a green day, actually a positive day. So throughout the day, we were up 0.21% for the day. That's indication number, let's say 1. That's the most important one. And the second indication that needs to be met is that the next day again, from after the first positive day, we need to have one more positive open. So you see on the first positive day, on the 18th of January, we closed at 33.31. On the next day, we have to have an open price above 33.31. And boom, we had it, 33.43 open today, January 19th. So this is a buying indicator, but since I didn't have time to actually put an order for, let's say, somewhere above 33.31, that's why I want now to wait for the price action to go down a little bit to catch momentum. And the reason why I had a limit or an order at 33.5 is because I just went to the lower time frames. For example, starting off with the 5-minute charts, you can see I would like this to drop down to this range here, around the 33.5 ish. So often we see that the price still, it trades around the rubber band, around actually a rubber band around the the moving averages, and sometimes it trends a little bit below the averages, and then it bounces up. So now we started off here, came down, bounced off, and maybe now it's consolidating, so I'm not exactly sure what's going to happen here, but I hope that we will have a little bit resistance and then move a little bit down before we potentially bounce off further. But I might be wrong, but I think that's what we need to do. We need to stay disciplined, and if this trade doesn't go, then it doesn't go. Then it's okay, just go on to the next one. So at least for now, I would like to see the price going down. But if it stays here, consolidates throughout for a couple of hours, then I might put in or increase or raise my buy target, and then maybe I'll buy at 33.55 or 33.6, but that depends on the price action. And if you go to the lower time frames, you can see it's still the same. So around this range here, this is the not exactly, is it the 100 EMA? It is around this 33.5 level, so I would like to have it drop below here. But on the 3-minute chart, you can clearly see that it has found resistance on the 50 EMA. EMA is exponential moving average, so it just bounces off and then trades in this range, and we can potentially just see this spike upward. Same on the 1-minute chart. It is the same. We're trading below the 20, 50, and 100 EMA, and the next level is around the 200 EMA, and hopefully we can catch the trade around this level here. But that's for my rationale for the limit order I've placed. But I will also set a stop loss and a profit target. And it's the same rationale as I've had with my previous trades. This will probably be my setup going forward in terms of risk management. We would like at least a 2-to-1 ratio on the upside. So, for example, if you see the stock price now at 33.57, and I have now, you can see 2.5% down, or if the stock price drops 84 cents, then I will hit my stop loss. So the rationale for that stop loss, how I set that, is that I use this screening tool. You can find it on TradingView. It should be like down here, so you can just open it, and then I type in Halliburton, and then I see on the ATR, average true range. So that's the true range that the price bounce up and down. I believe this is this is the last 14 trading days. So you can see it's 0.84 or 0.85, for example. So you can round this wherever you want. I am a little bit, want to be a little bit on the safe side, so that's why I round it down. So that means that I choose 0.84 as the minimum price, or where I set my stop loss. So here you can see down 0.84, and then I need at least a 2-to-1 ratio. So I need at least 5% upside, which should be around this level right here, around 35.30. But I also look at the previous price action here, and then I realized that we have here, you can see we have a gap down. So in many ways I have tended to see that the gaps, they are often closed, especially when they're so close to this price action here and we have oversold conditions, then we can easily see this gap close right here. So that's why I have this potential profit target at this gap close here around 35.5 or 35.66. So taking this up to this level here, then we have a 6% upside and a 2.5% downside. So in terms of the risk reward ratio, we are risking 84 cents to catch $2 or 2.06 divided by 0.84. That's a nice almost 2.5 to 1 ratio. So that's is something we are very comfortable with. So that's the rationale, guys, and hopefully I will have this this order filled. So thank you very much, and catch you on the next one, guys. Thank you.